If you looked at my portfolio right now, you wouldn't just be worried, you'd be terrified. As of today, I'm down over $57,000. I just walked away from a secure job, bet on myself. I gave up the steady paycheck for this? And in return, I watched a year's worth of salary evaporate into thin air. No safety net, no boss to save me, just red. And the worst part? The internet is celebrating. Every comment section is screaming, "I told you so!" They say I fell for a yield trap. They say the NAV erosion is permanent. And looking at this chart, it's hard not to argue that they aren't 100% right. But there is one massive problem with their theory. While everyone was panicking over the share price, they completely ignored the cash. Let's talk about why I'm actually up 20 grand. Those new here, I'm a solo entrepreneur who quit his night job 3 months ago to live off dividends and my tech business. My portfolio is not built like your grandpa's. It's built for income. I invested heavily in high-yield covered call ETFs. The promise? Massive monthly payouts. The risk? Well, this. Let's break down exactly where I lost this money. This is the most important concept in income investing. The price return is what everyone freaks out about. My cost basis was X. My current value is Y. For me, that gap is $57,000. Ouch. But I didn't buy these for growth. I bought them for cash flow. Over the last 2 years, these funds have paid me $77,000. So the math is simple. Negative $57,000 in value plus $77,000 in cash, that's a $20,000 net profit. And here's the reality check. You can't pay your electric bill with unrealized gains from a growth stock. You pay it with cash. And this cash, it's real. Now, I know what the comment section is going to say. It's a yield trap. You're eating your own tail. The NAV is eroding. Are they right? To an extent, yes. If the share price goes to zero, the dividends stop. That is a real risk. And I'm not ignoring that. But here's why I'm not worried about NAV erosion right now. I'm using the super high yield funds as a short-term play. They're literally buying me time to build up my tech business while being able to sleep at night. These funds distributions are paying my family's bills on months the tech business doesn't quite cover them. And with the leftover cash, I'm building into safer, more steady ETFs that will continue to fund my future. I never expected the YieldMax funds to keep paying 100% plus forever. Since quitting my job, the stakes are higher. A $57,000 drop used to be annoying. Now it's terrifying. It's a year's salary for some people. Just gone. At least on paper. But then the notification hits. $1,000 deposit, $900 deposit, week after week. And I sleep just fine, because my income hasn't dropped, even if my account value has. Am I selling? No. Am I buying more? Not right now. I'm just letting the income stack up. If you want to see exactly how I'm spending that $77,000 to build a safety net, check out this video here. But I want to know, would you have held through a $57,000 drop? Be honest in the comments. Thanks for watching.